Welcome, everyone. So at BNEF, we've been tracking sales of electric cars since 2015, roughly, and a lot has been happening since then. So we had the global pandemic, global world conflicts, a semiconductor crisis, and of course, inflation and the fastest rising rates in decades. But something else has also been happening in the background of all of these events, and that is that in a very short time, as EV sales exploded, electrified transport became the largest part of the global energy transition investment, with over 630 billion invested in electrified transport alone in 2023. Passenger EV sales come with quite an extraordinary story. So just in 2017, there were only 1 million electric cars sold globally that year, but that quickly doubled in 2019 and then further tripled by 2021. 2023 was another record year for passenger EV sales globally, with China, then Europe, and the US leading the picture. But despite being the record year for sales, the end of 2023 was still quite rich in those headlines calling for the slowdown in EV sales. Some of them were overly dramatic, but if we move into 2024, that figure here shows you the first quarter 2024 sales in various countries. And you can see that that slowdown in EV sales is real, but it's not the same everywhere in the world. So we still have countries like India, China, France, or the UK, where EV sales are growing at a quite healthy growth rate. But then we have countries like Italy, Japan, and Germany, which are recording passenger EV sales declines. And the reason for those declines is often regulatory, like in Germany, which is still trying to get into grips with the abrupt end of EV subsidies at the end of 2023. And this regulatory reshuffling and uncertainty will continue to drive the short-term adoption globally, especially in the biggest two EV markets, so Europe and the US. In Europe, the fuel economy targets are quite stringent, so essentially banning sales of combustion vehicles by 2035. However, those fuel economy regulations do not get more stringent until 2025. And what that means is that this year, EV automakers in the region will have very little incentive to increase sales of electric cars in 2024. Further complications in Europe stem from the more protective regulatory measures that we've been seeing happening recently. And that includes the EV import tariffs, which were put on EVs imported from China. If those tariffs are put in their fullness onto the customer, they will affect the price of those EVs in Europe. They will move them closer to competitive EVs from European automakers, but most importantly, they will move them above comparable combustion vehicles. And what that means is that there is a real risk that those entry-level EVs will no longer be within the reach of the lower-income consumers in Europe. In the US, it's quite an interesting story. It's worth mentioning just how much investment Inflation Reduction Act has been bringing into clean tech manufacturing. Since its introduction, over $100 billion was announced for clean tech manufacturing, and most of that went into batteries and EV manufacturing. However, this year again, there's a lot of uncertainty around the presidential elections in the US and what the impact will be on EV adoption in the country. Because obviously we have two different candidates, with the President Joe Biden speaking quite openly in favor of electrification of road transport, and then his opponent, former President Donald Trump, not sharing the same view. Once a year, we take it upon ourselves to model that short-term and long-term forecast. So short-term up to 2027, and long-term up to 2040 and even 2050 in some of the scenarios. And in the short-term scenario, because of all of those uncertainties that I just mentioned, we believe global EV sales will continue to grow, but at a much slower rate than what we have been used to. So we expect EV sales to grow 19% in 2024 to roughly 16.6 million units. But most of that growth will come from China, and China will take an even bigger chunk of global EV sales this year. By 2027, EV sales reach roughly 30 million units globally and will account for over 30% of global car sales that year. However, as you can see on the right-hand side, only China, the red line, and Europe, sort of pushed up by the stringent fuel economy targets, will be above that global average line. In the longer term, essentially what it's showing is declining battery costs. So average battery pack prices over the years, the last blue bar is column is 2023, the purple column is 2024 expected. So in our long-term outlook, which spans to 2040, the main driver for EV adoption are those relative economics of electric cars and combustion vehicles. Although it does depend on many factors when EVs will reach upfront price parity with combustion cars. It will depend on the market we're looking at, how price sensitive the market is, what is the manufacturing scale, and which segments we're looking at. But in our long-term modeling, most countries and most car segments reach that upfront price parity by 2030, even in those most price-sensitive markets. And that's because of the declining battery pack prices. So in 2023, average global declined by another 14%, and we do expect those prices to continue to fall in 2024 as well. And that's because of, again, many reasons. But what is happening in China at the moment will have a big impact on battery prices going forward. And that's because year to date, so early 2024, battery prices in China have been plummeting, with LFP cell prices averaging roughly half of the global 2023 average. And obviously, China's dominance of the lithium-ion battery supply chain plays a major part in that. So China dominates the raw material space because of its refining capacity. Upwards of 85% of components and cell manufacturing also takes place in China. And that's on top of China's dominance on the demand side, so in EVs and storage applications. But overcapacity also plays a part. So we estimate that from 2022 to 2023, lithium-ion battery cell manufacturing was running at roughly 200% overcapacity ratios. And now, if all of the plants that are announced come online, by 2025, we will be at 400% overcapacity globally. It's different by region. China is the main culprit, but it is pushing that downward pressure on battery prices. And it's not good news for battery manufacturers, but it's very good news for electric vehicles and our bright long-term outlook, which allows us to stay bright for the long-term adoption. So because of that, as the technology gets cheaper and better, electric vehicle sales reach 45% of global car sales by 2030 and 73% by 2040. But still, despite that long-term scenario, neither the US nor Europe are able to catch up with China, which is that sort of last three lines over there. So if I'm going to leave you with something, is to consider the great opportunity that the road transport industry is facing, but also to think about carefully how challenging it will be to navigate it properly. As EV sales increase, as adoption spreads across all vehicle segments, so commercial vehicles, passenger vehicles, buses, that cumulative EV market opportunity reaches $33 trillion by 2030, 40, and 63 trillion by 2050. That's the last. And most of that value is in passenger vehicles. But that's only vehicles. Now, in charging, rising electricity demand from EVs on the roads means that we need more chargers. In our economic transition scenario, so it's that base case scenario that I've been talking about right now, we will need roughly 340 million chargers to be installed by 2040, totaling roughly $1.2 trillion in investment opportunity, cumulative investment. But I haven't even mentioned our net zero scenario, in which we assume that a net zero fleet is met by 2050. And in that scenario, we will need 800 million chargers globally, with a cumulative investment of over $2.5 trillion. So all of those numbers are big, exciting. It's really easy to get overly excited, because some careful consideration will need to be made in the battery manufacturing space. So we estimate that in 2023, $77 billion was already invested in battery factories globally. going forward between 2024 and 2030, to meet that growing battery demand, annual investment in battery factories would need to reach roughly $33 billion per year, or $66 billion per year in the net zero scenario. But if you have a look at the already announced and planned investments, you can see that more than enough has already been committed to that space, totaling $1.1 trillion, or averaging roughly $215 billion per year in that time frame. So thank you very much. I will pass it on to Divina.